Hello everyone, welcome back to the channel. In today's video, we're going to be doing an educational breakdown of a trade that I took on GPUSD last week. This trade was put in the signals chat and the members were given a full private breakdown in a call that we had, one of our daily calls. We are going to be looking at this trade from both the weekly and from both our order block perspective and our Wyckoff perspective, and we're going to be doing a top-down analysis type video. We're going to start on the weekly, go to the 1 hour, and then go all the way down to the 1 minute, which is where we got our final entry. And which is where we actually found our Wyckoff distribution schematic. I did make a small document explaining the strategy on Google Docs. If you want this, if you want a downloadable link in the description, once this video hits 70 likes, I will be putting this in the description so you can then download it, maybe help you when you're doing your own back testing. I mean, I don't know how, why this would be useful to you, but you can have it if you want it. 70 likes. That's about it really. Now that I've said all of that, I'm just going to delete everything off this chart and go onto the weekly time frame. On the weekly time frame for GPUSD, I noticed that there was a very clear order block candle on the weekly time frame. This was our order block candle. Why was it valid? Number one, it was valid because it quite clearly broke structure to the downside from this level right here. So we had that level of structure be made, then the market smashed straight through that level of structure. We then had the market return back to our order block. It was also valid because if we look, we look here, you see that when that order block formed, we had an engulfing candle and we had rapid sell side volume. This suggests that smart money is getting involved in this market. No market participant that isn't smart money can cause this type of rapid increase in volume, right? And therefore, smart money must have gotten involved, and therefore this order block is valid, right? Then what we noticed was the market came back to our order block and sold off. I didn't actually enter this sell because for two reasons. Number one, if I had done, right, maybe if I entered off something like the 1, so I entered right here with my stop loss here, I would have had to deal with massive stop losses of how many pips? Of 300 pips. No way I'm dealing with those type of stop losses. Maybe there are ways to refine it, but you know, it's just a bit too much. And also, I didn't know it was going to hold because it was 2 years prior. And so there's always, you know, just because of that amount of time that there's no guarantee that this order block is going to hold and is going to be respected 2 years later, 2 years after it had formed. So I didn't actually take that sell. However, that does not mean that I cannot go onto the lower time frames, get those re-entries, and I did. If I go down to the 1 hour time frame, which is what I did. I did do a full video breakdown of this trade right here. We called that our POY. So this was our POY, and we took the market lower from this point here. And I did do a full breakdown of GU when it was at that point, and it will be in the top right hand corner of the video. But in today's video, we're going to be going through this POY right here when the market was up here, and then we took the market lower. So first, what I'm going to do is I'm just going to replay the market to here, and then I'm going to start going through it. So the first thing that I did when I saw this market is I drew the Fibonacci for that impulse taken, and I noticed that the market was coming back into the 0.5. The three levels that we look for to take the market lower are the 0.5, the 0.618, and the 0.786. The reason why I like the 0.5 rather than these two was because if we look left, let's get rid of this, there was a very clear order block candle at the 0.5, and there wasn't an order block candle maybe as clear on the other two levels. This order block candle is valid for two reasons. Number one, we see volume increase rapidly, suggesting smart money is getting involved. Also, if you look left, you will notice that all levels of structure were broken. So we had this little area of structure. If I just draw it out for us, this was the little area of structure that we had, the main area of structure we had, and then obviously we had these lower time frame structures that were perhaps just set in order to accumulate liquidity below these lows in order for this move downwards to occur, right? So we have that our main level of structure, however, which is the important one, be broken through, and we had that volume increase. Therefore, this order block is valid. Then what I did was I just wait for the market to come back into my order block, and I went down to the lower time frames, right? So that's the third rule of our three-rule system, right? You go into your higher time frames, look at your higher time frame structure, which was our weekly reaction. Then you go down to the lower time frames, you find that 1 hour POY. So this is our 1 hour POY. So if I just draw that out, and then you go down to the lower time frames, get some sort of lower time frame confirmation, maybe some sort of supply zone or a Wyckoff distribution in order to give you that lower time frame confirmation that will give you better risk to rewards and mean that you see that lower time frame reaction before you enter your trades. Because If you don't see that reaction, you're just gambling, because you're basically just predicting where the market will go. Unless you see that reaction, that trade is as good as invalid, right? And therefore, so this is what I did. I went to the lower time frames, went to the 1 minute, and I just watched this market. What I noticed was, I'm just gonna say it, there was a perfect Wyckoff distribution schematic, as you probably saw at the beginning of the video in the screenshot. This is what eventually happened. So if I just continue playing this market, um, I go to something like the 5 minute, because it does end up taking some time. There was a perfect Wyckoff distribution schematic. This is the reason why I took this trade. I would not have taken this trade if I did not have that Wyckoff distribution, right? If I go back down to the 1 minute, you are able to see all parts of that Wyckoff distribution clearer, right? So this is what we had. We had our primary supply form. Then we had smart money form that high, go away from that high, accumulating liquidity above that high, just to then take out that high. So we had our primary supply, then we had the liquidity on top of that primary supply be taken out when we had our buyer's climax form, right? So we had our primary supply, then we had our buyer's climax. From that buyer's climax, what we saw was the market come into our zone, right? Or you could say it came into our zone here, then it accumulated liquidity above that zone here, right? So this is our secondary test, just to take it out with this upthrust, right? So far we have our primary supply, buyer's climax. This is our automatic rally, which is just the retracement of that buyer's climax. I'm not really going to talk about the lows of the Wyckoff distribution, because the fact that it's a distribution means the highs are the important ones. Because if you think about it logically from like a liquidity standpoint, this is a high. Taking out that high will activate retail buyers, which will give smart money liquidity to open new cells, which is the whole point of a distribution, right? They're getting liquidity to open cells here, another cell here, another cell here, instead of opening massive, like something like this. So the market is at this point, they decide, guess what, we want to sell this market. They're just not going to open a massive 200 million pound sell at this point, for two reasons. Because number one, at this point, the liquidity to open that sell may not be available, and also at this point, if they open a 200 million pound sell, the market will just crash, and that's not good for many reasons. That's how flash crashes happen. That's how market crashes initiate, right? They don't want that to happen, and most of the time they won't even be able to make that happen because the liquidity isn't available. That's why they do this type of thing, this Wyckoff distribution or accumulation if they're buying, in order to get the liquidity that they need in order to open cells, and also to open small chunks of cells. So 20 million here, 20 million pound sell here, another 20 million pound sell here, another 20 million pound sell here. Yeah, so that overall they have however big a position they wanted without crashing the market, and with finding the liquidity that they need in order to open those cells. So that's just a quick explanation of what Wyckoff is. If you want another video explaining Wyckoff, just say so in the comments. I can 100% make that happen for you. So if I just go back and I get rid of this, because we know where we are right now. So this is our automatic rally, but I'm not going to talk about the lows as I've explained to already. This is our buyer's climax. Then we have the market accumulate liquidity at that level of that buyer's climax. This is our secondary test, which accumulates liquidity at that buyer's climax. I think I said that already. And then the market take out everyone. They take out people that were selling at that buyer's climax's level and people that were selling at this zone. Everyone has been taken out of the market through this move up, which is our upthrust. So this is our upthrust. Then the market retraces. We don't care about the lows, so I'm not going to talk about the lows. You could call that a sign of weakness, but I'm not going to talk about the lows, as I've already said. Then the market takes out the upthrust, right? So you could say that the market accumulates liquidity at this zone. Let me just make it a straight line. So this is our zone that the market accumulates liquidity at. So you can see that there is a little bit of a double top at that zone, just to then the market take out all of that liquidity to the upside, forming our U-tide or our upthrust after distribution, or our spring, right? So there's two names, the U-tide, which just stands for, so UTAD, which stands for upthrust after distribution, or you could call it the spring. So those are the two names. Then we have the market come back down and break structure to the downside, right? That's what makes a U-tide valid. The U-tide must break structure to the downside for it to be valid. Because it broke structure here, it is valid. What we notice is, if we zoom in, you'll notice that this U-tide left behind a perfect supply zone. We have this supply zone that the U-tide left behind, and that we expect the market to come back to after it broke structure, to mitigate buys opened at that zone, for then the market to continue to go downwards. If I show you my entries and I show you the price at which I entered, you'll see I entered at my best entry was, I should say, 1.38354. So if I show you that on the chart, and I just get up my rate tool or something like that, maybe right there, and I double click my rate tool, and I go to, I think it was 1.38354, that was my entry. This was where I entered, and I entered all of my sells here at that last point of supply. So this is a preliminary supply, bias climax, automatic rally, a secondary test. I didn't mark it out, but this is our secondary test, up thrust, a sign of weakness. Then we have the market come up, forming our UTAD, break strikes to the downside, validifying that UTAD. Then this is our last point of supply. This is where I enter, just because it's literally the last point of supply. It's called that for the reason because it's called that because we don't expect the market to go any higher than this point. This is the last point of supply, you know, the clues in the name, right? So we don't want the market to go any higher than this. This was where I entered, and this was where I expected the market to drop from, and for me to hold all of my trades. Another reason why I like entering at the last point of supply rather than the UTAD is because for the last point of supply, because we don't expect it to go any higher, you can set your stop loss to break even very early. So I think what I did was I set stop loss to break even as soon as it broke this level of structure right here. Stop loss goes to break even, right? So that's why I like it, because you can set stop loss to break even very early, as you're not expecting for the market to go any higher than that point. So now what I'm just going to do is delete all of these markings out, and I'm just going to show you where I targeted. So I'm going to go back up to the 1 hour time frame, and I'm going to show you my targets. My targets were fairly simple. All I did was I targeted this level here and this level here. So I was trailing my stop loss. So what I did was, after each break of structure, I'd set my stop loss at the level of structure above. Right. So what I do is, this was my final take profit. I was down there, and all I did was I took final profits there, and I let the market hit my take profit. It hit very quickly, and we were there. If I just let this market stop this market, this was where I took full profits off the table. Simple as, very simple trade. I think it ran for 100 pips. If I show you, nearly 100 pips, right? Let's just call that 100 pips. It's good clickbait, but yeah, it was like 90 pips to be exact, but let's just round that up to 100 pips, right? Very simple setup, very clean setup. 1 to 18 risk to reward, 17.96, but let's just be, you know, let's just round it. 1 to 18 risk to reward, 100 pips caught. Very simple setup. That's how you enter your trades. Very clean setup. Now it's for the announcement, right? I did post this in the mentorship, so a lot of you might be thinking, you know, if these type of trades are being posted in the signals or the mentorship, I want to be added to the mentorship. I've decreased the price of the mentorship immensely. The price is now only $140 or £100, right? If you want to be added to the mentorship, that's all you have to pay. The first link in the description, it will get you there. This will be what the page will look like. It's now only $140 for lifetime access to the mentorship, right? And signals, right? So if you want access to the signals and mentorship for lifetime, we're having this sell for 5 days, by the way. This is a one-time only deal, $140 or £100. First link in the description, or contact me on Telegram. Will get you added as soon as possible. Also, I am running a giveaway. Once we hit 1,000 subscribers, I am going to be giving away access to the signals chat and the mentorship to 3 lucky people for free. All you have to do to be added to that giveaway is comment down below done. That's all you have to do. You can just leave a nice comment, and that will automatically add you to the giveaway. But you just need to comment something in the comment section down below. That will automatically add you to the giveaway, and give you a chance of getting that mentorship and signals for free for lifetime. So yeah, that's about it really. I hope you've benefited from this little breakdown. I hope I've been able to help you in some way. If you have, please leave a like, comment, subscribe, all of that good stuff. Once we hit 1,000 subscribers, as I've already said, I'm going to be doing that giveaway, and make sure you don't lose out on this sale right here. Half price. It was $280 before, $140 only now, only £100, because I know a couple of like most of the people watching this channel are from the UK. So £100 or $140 for a limited time only. Make sure you go ahead and you take advantage of that sale. That's about it. Thank you very much for watching, and I'll see you all in the next video.